what is happening in the AI market means that competition is increasing, and competition is a good thing for users of artificial intelligence, which means that while some, maybe just one of the Magnificent Seven may have some challenges here, the reality is the S&P 493 are going to be beneficiaries of very powerful and cheap and readily available AI technology. I think, by the way, some of the Magnificent Seven, like Microsoft, Amazon, Google, they're all going to incorporate AI into their technologies, into their products already. They are doing that, and that just means it'll be an upgrade cycle to a lot of the software, and they'll be able to charge a little bit more. And so I'm not crying. I'm not crying for them. I think they'll do.
Are you investing in Nvidia? Or maybe you're wondering if the AI revolution is really worth the hype. Imagine this. One headline causes a $1 trillion market shakeup, and stocks you've been watching suddenly become affordable. What would you do? Wall Street went into a frenzy this past Monday when Chinese artificial intelligence company DeepSeek unveiled its newest creation, a chatbot reportedly rivaling OpenAI's advanced technology. What's even more intriguing is that DeepSeek claims its chatbot achieves this level of sophistication with significantly less computational power. As the news hit, it sent shockwaves through the stock market, leading to a staggering 17% drop in Nvidia shares. In a single day, the tech giant lost nearly $600 billion in market value, marking the largest single-day loss for any public company in history. But the fallout didn't stop there. The entire tech sector felt the ripple effects, with the broader market shedding approximately $1 trillion in value as investors grappled with the possibility that future AI innovations might require fewer high-end chips than originally anticipated. Now, take a moment and ask yourself, does this sound like the kind of situation where fear might have overtaken logic? Could this massive sell-off actually present an opportunity for savvy investors? Let's take a closer look. While the dramatic nature of this sell-off might suggest an underlying crisis, it's important to recognize that the market often reacts impulsively to headline-grabbing news. In this case, Wall Street's knee-jerk reaction reflects a misunderstanding of the complex infrastructure and advanced technology required to sustain AI development at the highest level. By peeling back the layers of this situation, we can uncover potential opportunities for long-term investors who are willing to go against the grain. Let's break down 3 companies that were impacted by this sell-off and explore why they might offer compelling opportunities for investors. SoundHound AI, Applied Digital, and Taiwan Semiconductor Manufacturing Company. The hidden gem in voice. AI DeepSeek's announcement didn't just impact Nvidia. It also dragged down the shares of SoundHound AI, ticker SOUN, a leader in the voice AI space. SoundHound saw its stock drop by over 11% on Monday, lumped in with the broader AI sell-off. But here's the twist. SoundHound operates in a completely different niche from the large language models dominating headlines. Ask yourself, when was the last time you used a voice assistant like Siri or Alexa? If you've ever felt their limitations, SoundHound's innovation might pique your interest. This company specializes in enabling businesses to develop customized voice interfaces without relying on big tech platforms. That's a game changer. What makes SoundHound stand out is its focus on providing a unique, independent voice AI platform. Protected by over 155 granted patents, the company's technology empowers businesses to create tailored voice interfaces without being tied to tech giants like Amazon or Apple. This independence allows for flexibility and innovation, especially for businesses aiming to maintain control over their user experience. And here's the kicker. SoundHound's revenue is projected to nearly double by 2025, driven by its strategic partnerships and expanding market presence. With clients spanning industries like automotive, healthcare, and hospitality, SoundHound is well-positioned to capitalize on the growing demand for conversational AI solutions. While others panic, this could be a golden opportunity for those looking to invest in a focused AI player with a clear growth trajectory. Could SoundHound's recent dip be the moment to strike? But before we proceed, here's a question. What's one stock you think will dominate the AI market in the next 5 years? Comment your thoughts below. The power. Behind the AI revolution, another company caught in the whirlwind is Applied Digital, ticker APLD. Its stock took a massive 27.7% hit on Monday, but don't be too quick to dismiss it. Applied Digital isn't just another tech company. It's addressing one of the most critical challenges of the AI age: power. Specifically, the power needed to sustain next-generation data centers. Let's put this into perspective. According to Morgan Stanley, by 2028, the US is projected to face a 36 gigawatt power shortfall for data centers. That's the equivalent of 36 nuclear power plants. Data centers are the backbone of AI innovation, providing the computing power necessary for training and running complex machine learning models. Without sufficient power and infrastructure, the AI revolution could hit a roadblock. Applied Digital is stepping up to fill this gap. The company focuses on developing next-generation data centers that are more efficient, sustainable, and capable of meeting the growing demands of AI workloads. With $5 billion in new funding from Macquarie Asset Management and strategic partnerships with Nvidia, Applied Digital is uniquely positioned to thrive, no matter which AI models win the race. Now, think about this. Would you rather invest in a company that's building the picks and shovels for the AI gold rush, or one that's betting on a single gold mine? Applied Digital represents the foundational infrastructure that the entire AI industry depends on. This sell-off could very well be a gift for patient investors. The king of semiconductors. Then there's Taiwan Semiconductor Manufacturing Company, ticker TSM. DeepSeek's announcement caused a 13.3% drop in TSMC's shares on Monday. But if you take a step back, it's clear that this reaction doesn't align with the company's long-term significance. TSMC is the backbone of global semiconductor manufacturing. With a staggering 65% share of the global foundry market and expertise in cutting-edge chip production, the company isn't just important to AI. It's essential to nearly every technological innovation you can think of. From Apple's iPhones to AMD's processors, TSMC's chips are everywhere. Here's something to consider. While Wall Street may be overly focused on short-term AI chip demand, TSMC's role in the broader semiconductor industry ensures its relevance for decades to come. The company's unmatched expertise in advanced manufacturing processes makes it indispensable to clients developing high-performance computing solutions, smartphones, and IoT devices. Additionally, TSMC's ongoing investments in research and development solidify its position as a leader in the semiconductor space. What makes this pullback particularly compelling is the company's irreplaceable role in global technology. The recent dip in its stock price offers a rare chance to invest in one of the most indispensable players in modern technology at an attractive valuation. For investors seeking exposure to the semiconductor industry, TSMC remains a top choice. Taking a closer look at this table, we see three distinct players: SoundHound AI, Applied Digital, and Taiwan Semiconductor Manufacturing, each impacted differently by recent market volatility. SoundHound AI, with a market cap of $5 billion and a gross margin of 55.33%, highlights its efficiency despite posting a negative EPS of negative 36 cents. Its dip reflects broader market trends rather than company fundamentals. Applied Digital, trading at $6.69 with a $1 billion market cap, might look risky on the surface with a slim gross margin of 2.29% and an EPS of negative $1.73. But its strategic focus on building next-gen data centers gives it a unique edge in powering the AI revolution. Then we have TSMC, the industry giant, with a $1 trillion market cap and a whopping $90 billion in revenue. Its EPS of $7.04 underscores its dominance, even as the stock faced pressure from knee-jerk reactions in the market. These numbers reveal something important. While headlines spark panic, the fundamentals of these companies tell a different story. Whether it's innovative voice AI, critical infrastructure, or chip manufacturing, the long-term growth potential of these players is hard to ignore. So, as an investor, the question becomes, how do you turn moments of market fear into strategic opportunities? Why panic often equals opportunity. Here's a question for you. Have you ever noticed that some of the best investment opportunities emerge when fear takes over the market? Monday's AI-induced sell-off, while dramatic, has opened doors for investors willing to look past the hysteria and focus on fundamentals. SoundHound AI is revolutionizing voice technology in a way that sets it apart from competitors. Applied Digital is solving the critical power problem for the AI revolution. And Taiwan Semiconductor remains irreplaceable in the world of advanced chip manufacturing. These three companies represent unique, high-potential opportunities for investors who can see through the noise. And remember, the best time to invest is often when others are fearful. Could this be one of those moments? If you found this analysis helpful, don't forget to like this video and subscribe to Simple Investing Secrets for more insights like these. Before you go, here's one last question. If you could ask an expert one thing about the stock market, what would it be? Comment your thoughts below. Just a reminder, this video is for informational purposes only and should not be considered financial advice. Always do your own research or consult with a financial professional before making investment decisions.